Good, good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. GMT, every day of the week. I am having a laugh with the internet connection. Things are not working entirely as planned, but they are now. Welcome to the show. We do this every single day. Discussing all things to do with the crypto market. That is the crypto market, the NFT market also, and also just some strategies to try and attempt to make some or a ginormous amount of cash, if at all possible. I'm your host, Bicho. I'm joined by my legendary co-host, Legendary and Sammy. We're going to get into everything that's been going on in the market, some big news in the last 24 hours. We're going to do that in just a second. But as always, just before we do that, friends, nothing that we say here is financial advice. This market is exceptionally risky. We do not know anything for sure, so please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Thursday. It is the 11th of April. How are you doing? I tried to start the show just when you weren't in your chair, just to see if I could catch you out for a second. It didn't work. How are you doing?
GM, yeah, I was quick, and I was thinking, would you start the show when I'm not in my chair? Or would you wait those 3 or 4 seconds on purpose? I had that thought in my mind, but my internal gamble was, nah, you're gonna wait on me. But apparently, I was completely wrong about that.
Do you know what happened? I was actually trying to go live, but this is clearly the universe telling me that I shouldn't have tried to catch you out, because that's why I was laughing, because I was pressing go live, but then the screen was freezing, or like the internet was being slow or something. It just wasn't going live until you were there. So the universe knew, no, this is Legendary has to be here for the show to run.
Love it, love it when the universe is on my side and in my corner.
Yeah, it is. It is, at least for today. Sammy, welcome. Welcome. Are you looking forward to a little meetup later today?
I am indeed. It's been far too long. Has it been a month?
It has.
Just a month, isn't it? Yeah.
Yeah.
Were we in? It was Paris before, or was that? I can't even remember anymore. We're all merged
No, we did
into
London.
one. Was it London?
I think.
Okay.
Yeah, last month we did.
Time literally flies.
Yeah, last month we did London, and we also did Paris last month, I think, if I'm not mistaken, unless Paris was it was in February. I can't remember, but we've done one in February in London. We've done one in March in London. Now this is the one in April in London. We've done Paris whenever we were there. Who knows? I don't know. And we will also do Dubai next week. So very much looking forward to that. Legendary. This is the first one in London you're missing out on. How are you feeling?
Yeah, obviously I'm feeling FOMO. Also, you told me that this time there's people coming who didn't show up the last 2 times when I was in London, which makes me a bit suspicious if this is a decision that has something to do with me, that they're not coming because that they are coming because I'm not there.
The universe is against you. This is
Yeah.
the balance. This is the beautiful balance of the universe. Yes, it wants you to be on the show, but no, some people in London don't want to attend the meetup if you're going to be there, Legendary. This is the beautiful balance of the universe. Do you accept the balance? Do you embrace the balance?
Gotta embrace it. There's karmic balance. Sometimes we go up, sometimes we go down. It's like the markets, it's like gambling, it's like everything.
Exactly. We love the balance. We like the universe communicating with us, and we like our random interpretations of what it is saying. We've got way more interpretations on the crypto market coming up for you in today's show. Let's get into it, starting with the headlines. As always, they come from the snapshot, which is pinned up top. As always, if you do find it brings you some value today, please do give it a like. Let's get into it, starting with some crypto price action. Bitcoin is up 3%, back at 71K. Absolutely love to see that. We'll discuss maybe why that happened in just a little bit. ETH is up as well, a few percent at 3.6K. Solana up a couple of percent at $175. First big headline news: SEC moves to sue largest DeFi protocol Uniswap, and Uniswap responds by saying, yes, they're very disappointed, but they are ready to fight. Going to get into that all in a bit more detail. Number two, $100 million withdrawn. I think it's now up to $150 million withdrawn from the biggest Solana DeFi protocol, MarginFi, as the founder resigns after internal politics and timeline anger. Real set of drama on the timeline yesterday with the founder resigning. I didn't even know founders are allowed to resign. Are you allowed to quit if you're the founder? What happens if you are literally the person who runs the thing and then you're not there anymore? So we're going to talk about that without getting into too much of the rumors and the he said, she said type of stuff. We'll just hit the big points there. And finally, more on the Ordinals NFT side, Rune nodes dropped to node monks trading immediately at 0.034 BTC. But also in general, as we touched on yesterday, Ordinals were on fire. Rune pups rise to 0.11 BTC, and Runestones hit another all-time high at 0.09 Bitcoin as well. With the Runestone, this is data provided by NFT Stats. With the Runestone's floor up to 0.09 BTC, the overall market cap for the project is now $740 million, more than any NFT ordinal project other than CryptoPunks. So fascinating stuff happening there. Big numbers we're talking about on the ordinals side. So we'll discuss that a little bit too. Into some floor prices from around the NFT market. CryptoPunks down. The first sale for a while took place under 40 ETH, down a few percent at 40 ETH at the moment. Bored Apes at 12.2, Mutants at 2, DGods at 1.5, Captains at 3.3, down 4%, Azuki at 4.1, Penguins down a few percent at 11.7, Mad Lads up 5% at 142. As noted in the snapshot, they've been included in the Sharkify airdrop, which is coming pretty soon, the NFT lending protocol on Solana. They're just getting everything on Solana. That's my reflection there. And the Nouns winning bid was at 7.6 ETH. Some top sales, Keyboard Cat selling for 36 ETH on Foundation, following in the footsteps of the Dog with Hat selling on Foundation for a crazy amount not so long ago. This is the Keyboard Cat selling for 36. Another CryptoPunk selling for 39 ETH. And Xcopy run continues. His most prominent edition, called the Doomed, sold for 24.8 ETH just in the last 24 hours. So big Xcopy run still ongoing. Legendary, that is the price action. Those are the headlines. What's catching your attention, catching your eye before we get into the bigger discussion today and the main headlines?
A completely different collection catching my eye right now is Overworld Incarna. They are up 14% over the last 24 hours, sitting at a 1.94 ETH floor. They did mint last year at 0.15 ETH, did go all the way up to 2 point something ETH, corrected down all the way down to 1 ETH, and now that obviously they are waiting on a double token launch, essentially, because they are the PFP project by Jeremy Horn and like the premier project of Exterior, the launchpad. Exterior will have its own token. A part of that will apparently go to Incarna holders as well. And as that social farming campaign is getting more and more traction, it is reflected in the floor price of Incarnas as well.
Interesting to point out the double token. We like that. We like the ability to double dip in that respect. That's nice to have that kind of specific gaming knowledge from you, Legendary. So yeah, as you say, up 14%. Sammy, anything catching your attention here before we hit the main headlines and the bigger discussion?
Yeah, I did notice the Incarnas and obviously assumed it was the Exterior, but Milady's just keeps on continuing to go up, another 10%. It's above 5 ETH now, which is wild, and I think it's purely off that mimetic sentiment. But yeah, outside of ETH NFTs, I was starting to look at Blast, because you've got sort of infrastructure being built out from the NFT side. You had Easy go live, well, with the Easy token today. I don't know if it's live on Blast yet, but that's like an NFT raffle marketplace. So it'd be interesting to see if some of these Blast NFTs end up being raffled within there, which could add a bit more liquidity. So we might see some price action on the Blast NFT side, which has been suffering recently.
You say that, I've just flipped the heat map over on Mintify to the Blast NFTs. Everything's down, Sam. Everything's
That's
down.
what I mean. It's not live yet, I don't think. So I'm expecting there to be a little bit more liquidity, because the raffle system works where you effectively put like an NFT up for like a number of tokens. People buy in at a fraction of the cost of the NFT. It then sells, and then you can effectively sell the NFT into that liquidity rather than having to sell it on the open market. Some interesting mechanisms, similar to Rollbit in that sense. But yeah, it's a new innovation of marketplace. So
okay, that's pretty interesting. I think on the NFT side, more specifically, it definitely looks like just the Blast standalone by themselves at the moment. They seem to be down for whatever reason here and now. Blast Runners down 40%, Shard Boosters down 62%, Munchables down 17%. Obviously, they were the people who experienced the $62 million hack. So Mintify Blast Keys down 30%, Crypto Blast Punk up 30%. Seems to be a lot of red on that map at the moment. But one of the things we've been speaking about, maybe this will lead us into our bigger discussion for today, is we've been speaking about how Pac-Man seems to be alluding to the incentivization of holding other types of things on Blast rather than only holding ETH and like interacting with protocols. Like, I guess in the same way that all of these other ecosystems want to try to incentivize like a coin culture, like cultural coins. If there's no if given that he's the protocol building it out at the moment, if there's a way to incentivize like actually holding that, that could be an interesting thing too. Legendary, do you have any perspective on that, on whether these Blast NFTs themselves, Blast coins themselves, could benefit from that like at some point in the future, or is it just all speculation at the moment?
I think it's an interesting thought experiment to have, because right now you're very much in the mindset, what asset do I want to hold, especially on a yield-bearing blockchain where USDB is farming more than 10%, where ETH is farming 3 to 4%. And then you're like, if I'm just holding an NFT to get a gold distribution, I could put that ETH or that USDB to use in other places, get gold, and get a native yield on it. So you're currently at a disadvantage to hold tokens other than ETH or USDB. That does not only go for NFTs, right? That goes for other ERC20s, like PacMoon or whatever, which is something that the team had addressed that with future seasons. They do want to implement that component for at least gold distribution for other, or point accumulation for other assets that you're holding. But if everything suddenly would become natively yield bearing on a blockchain, somehow determined by the underlying value, which is like taking that even one step further, this would be really interesting, because then you would basically remove the disadvantage of holding an asset that is idle.
Yes.
Because right now, if you want to make your NFT productive, the only thing you can realistically do is to throw it onto a lending platform, borrow against that NFT, pay interest on it, and then hopefully put your capital to use in a way that yields more money than you pay in interest for your loan, which is a major disadvantage compared to like a fully liquid asset.
Yeah, it's really interesting. I just want to provide a bit more color to some of the ideas that you were sharing, because the reason why I wanted to talk about this today is the main discussion point is I saw this tweet from NFT Stats yesterday, and I read it and I thought, damn, this really could change the whole dynamic. Like the fact that some of these assets are yield bearing can completely change the dynamic. And he gave two examples, which I found really interesting. So I'm going to share them. Then I'm going to come to Sammy first, and then I'll come back to you, Legendary, to get your perspective on this. This is what he said. I'm sharing it for the people watching in. Remember, we're live on YouTube. We're live on X Video too, if you want to watch in with us. But for the people listening in, here we go. I still think the most interesting long-term use case for Blast is dApps earning revenue like a bank, so collecting interest on deposits. But that also includes for NFT projects. So this idea, which I think is being implemented by Blaster, the Blaster model, which is collectors mint refundable NFTs from creators. So collectors can redeem their NFT for the mint price at any time. And the artist makes money on the interest of the locked ETH or USDB. So the fact that when someone mints their NFT, they are giving you, the creator, ETH or USD. It's locked. They're giving their ETH to you. You will then become the beneficiary, not just of the ETH, but of the interest to that ETH. And if you do that at scale, you've actually got a whole load of interest that can be your actual revenue. Now, obviously, the yield is actually like a quite nice amount at the moment. But if it's a high amount, that could actually be like, look, I'm not saying it's necessarily going to fund the whole business forever, but that's like a reasonable, it could potentially be a reasonable amount. And Sam gives this example. He says $1 million USDB mint, which is 1,000 NFTs at 1,000 USDB, which is not unforeseeable in this space at all, would generate 130,000 per year in interest at current rates. Like, that's pretty mind blowing. 1,000 NFTs at 1,000 USDB is not unforeseeable as a raise. And the fact that that amount of capital would generate $130,000 a year in interest rates, assuming obviously no one starts taking their money out halfway through or after 1 week when they get annoyed at you. So the minters get upside in the NFT and can refund it for the mint price at any time. Example 2 would be casinos, where a casino with no rake. So gamblers put in USDB, they need to lock it for a short period of time to play, say 1 to 3 days. And in that time, the casino is actually making money on the interest, like straight away, because of the way the chain is natively yield bearing. So gamblers can gamble with no house edge. Sammy, coming to you first. Maybe we'll ask you about the NFT model example. Legendary probably specializes in the GambleFi example. What are your thoughts on that kind of idea as a project, and any other thoughts you might have on this way this dynamic changes the game?
Yeah, it's not new. I mean, you've got EtherFi NFTs, which effectively do this, where you buy those for 0.1 ETH, and then you lock that up, you get the yields, you get the eigenlayer points, and then you can burn the NFT to get your ETH back. It's locked up for a period of time, so there is like discounts and things applied to that if you redeem it early. But even if you look at various DeFi protocols, when you deposit some whatever currency token into liquidity pools, you receive an NFT in return, whether it's Orca, Uniswap, and they have like dynamic visuals as to how much you put in, the metadata updates with like how much you've deposited. And I think that this is kind of taking it maybe a little step further, where we're looking at it from like an NFT lens. We're coming in and being, okay, well, NFTs, PFPs, we'll lock it up, we can redeem it, but it's got like something else on it. And I think where I see this going is you'll have eventually real world assets. So Chainlink do this with, I think they've done examples with Tesla. So like a car tokenized on chain, it has a Tesla, has all the details about the model. But you could do it with yield generating assets, they're real world assets as well, whether it's like a property that earns rental income that you then get that distributed back through, or whether it's like a portion of a fund, like a real estate fund. So I think there's huge potential with this, and I think that's the way that it's probably going to go. But it was still in that nascent stage where we're experimenting with it, and I think we're still looking at it from a fairly primitive point of view, where it's just like an NFT. We're getting native yield from MakerDAO, wherever it's coming from. But there is so much potential for it to go. So I completely agree with what Sao NFT Stats is saying. But I think the landscape over the next 12 months is going to evolve so much.
Yeah, really, really interesting. I wonder, I completely agree with you. I think we still need to digest like the full implications of all of this stuff. Legendary, definitely want to come to you here, whether you want to talk about the NFT model, just the general thoughts on the implications for this, or the gambling scenario in particular, given that is your area of expertise at the moment.
Love it. Definitely want to talk about the gambling. I do think it's super interesting because if you already look at the GambleFi platforms on Blast, you can already see that even in absence of having to deposit your funds into like a gambling account, which is not what is happening. You're playing with the balance on your wallet, whether it is on YOLO games or whether you're dueling on Cambria. But the incentive structure is already shaped in a way with the gold incentive that is live already, that basically the casino does not need a house edge because they are getting gold to distribute. They are building a business with revenue, with a TVL, not with the TVL, but with the volume being farmed on there. They will have their own tokens. And this is quite outstanding if you think about I don't know, your standard set of playing roulette with 1-0, where you have a 2.7% house edge. If you play with 2, that house edge goes up to almost 4% to 3 point something. And then if you don't have that necessity, and gamblers do care about that a lot, especially in the whale territory. Look at Rollbit, look at how they're trying to cater to whales by having loss backs, having VIP programs, etc. And if you are gambling with millions of dollars, you typically do choose the place where you take your money to wisely, because A, you want to trust the casino, and B, you want to have at least a minimum house edge or a standard house hedge, but with a good amount of rake back, loss back, etc. So that you, obviously all gamblers know that it is a losing business, but
Yes.
at least you want to cut your losses in the long run. But now if you're like suddenly in a position where gambling can be EV neutral or even EV positive, just because EV neutral because house doesn't need to take an edge or is taking fees and is returning all of them back, which is something that YOLO does right now, which is something that Canberra has announced to do. And obviously they're not saying, oh, you spent 2 ETH in fees on Canberra, here's your 2 ETH back. They will design different tournaments, mechanisms, incentive structures, but they do give you a chance to get that back, which is often the case that is designed to help like the more intense gamblers, the more high volume gamblers more than the lower end, because they are driving volume to the platform at the end of the day. And that is an absence of that gold incentive. If you add that on top of it, you could arrive in a scenario, and this is why many people are farming YOLO or are very, very active on Canberra, because they do have a mental model or a math model where they think this could be EV positive depending on the gold price and depending on their ability to earn that rake back. And this is all in absence of what you have been describing on the NFT side of things, because when you suddenly have a very simple model where like deposit 1 ETH into your online casino to gamble with that, and that as it sits there is earning yield, and the casino is happy to take the yield, and in exchange for that it says I don't need any kind of house edge because our business is to make sure we have a lot of volume in TVL and we earn money on that and not on the house edge. That is a very, very cool a place to be. But also you wouldn't have to take the beautiful thing is you wouldn't even have to take all of that house edge, all of that yield, because 12 to 15% yield is way more than the house edge that the casino typically has. Like that would be super greedy of them to do that, because if they have on slots a house edge of 0.16% on original games, 0.1 to 1% roulette, obviously more than that, as I just said, but all would stay under like a 3% house edge for 99% of the games by far. And if they suddenly would take 12% yield and pocket that, they would make 4 times the amount of money, but could still present as a casino that doesn't take a house edge. If they only pocket 6% and share the remainder of that, then it would actually be a casino that has a negative edge and makes money on the yield that they get to keep. And that would create a pretty interesting model.
I mean, in some respect, then that's really, really fascinating. But then doesn't that negate the need to have anything, and then you just become a bank? Like, what would you just become? Is it basically just saying, give us your money, we are gonna earn the yield instead of you. But I guess you've still always got the potential to make more, and that's the whole point. So instead of you being able to earn the full 15% of yield, you get a chance to gamble and earn a bit more, but you'll still end up with like 6% of the yield or something, is what you're saying is a potential scenario.
Yeah, could be a potential business model. I mean, yes, and the business model essentially doesn't change, right? The casino makes more money the more people are gambling on it, because they either earn on the house edge or they earn on the yield that they farm. They don't care about like what makes the money, and in the sense of, is it called yield, is it called house edge? They just care about the volume that they are able to generate.
Interesting stuff. Sammy, I know you wanted to come in on this. I'm just bringing Brett up to the stage. I'm sure he might have some thoughts here when it gets to the complicated discussions around yield and which direction these things are going. Sammy, your thoughts first.
Yeah, I mean, I get the idea and I get the concept, but anyone who's kind of half wise to it, you'd realize that you're forfeiting that yield. So that is effectively the house edge that you're implicitly losing.
Yes.
So I like the idea, and I think most gamblers would just see it because they'd be like, okay, well, if I go into a casino, I'm not going to earn money or yield on the money anyway. But with online casinos, I guess with the crypto world, like you can literally deposit that and earn that yield. So you are implicitly losing out on that.
Sammy, I think you're getting lost with the internet. Legendary's lost for you as well, right?
Yeah, but let me jump in here quickly because it's interesting. Like I'm a person, for example, when I gamble, I deposit my money, I gamble, I win or lose, and I then withdraw immediately. But many of the people who I know who are gambling, they just keep it on there. They either have like 1 ETH, 2 ETH sitting around, and whenever they have a big win, they will withdraw that, and whenever they go to zero, they will replenish it. And most online casinos even have a vault. Like if you have a big win, you can send it to like a vault where you just need to type in your password to essentially withdraw it. But many people like to do the like basically bankroll management for online casinos on site, and are not like me who deposit, withdraw all the time. So you would then have often a situation where idle funds are just sitting on the casino until the gambler decides, yeah, I am in the mood to hit up the spins, the slots, and gamble again.
Yeah, it's interesting stuff. Like Pedito in the YouTube comments just said, wouldn't you just deposit to gamble, and then withdraw? I mean, on some level, yes. But I guess the thing is here, the game-changing thing that I guess in your head you need to get your head around is the fact that your money will just make 15% now. And so so like, yes, you could still have more money by the end of the scenario, but it's still going to be less. So now in order for you to do anything, it has to be worth more than 15%. I think that's where my understanding is going. Although I appreciate like it's kind of like it's kind of mind scrambling a little bit because you need to adjust to the new scenario. Definitely want to hear from Bread on this, who always has great takes on some of the more complex incentive structures and conversations to do with yield. Bread, welcome to the stage, my friend. What are your thoughts on like the implications and maybe the specific examples we've been talking about here for this kind of natively yielding asset for businesses in the space?
Hey guys, yeah. So first thing is, I just think it's crazy how our minds warp and how disconnected the NFT side is from the DeFi side of the crypto space. Because this, right, they're not doing anything new. This is just basically, and there's a little bit of rebasing, but basically just swapping ETH for staked ETH and then holding onto that, right? Because staked ETH is yield bearing. That's a simple swap that does whatever. Yeah. That's something that's always been able to be done, whatever. But because now it can be done by default, everyone's minds are bending with new things, which is cool. That's good, and it's cool how much that happens. But the other thing I want to say is it's not exactly a straight line between the rake and 15% APY, right? Because that's a 15% on the year. So we're talking volume versus a long time horizon, right? So if I come on, deposit 1 ETH, but bet that thing 100 times a day, right? My volume and then 1% on every one of those transactions is much higher than 15% APY. So it's not a direct now that it's 15% yield bearing, that it counterbalances what the rate would be, because that's over the course of a year. Yes, 15%.
Yeah, really, really good point. I think that's an excellent point to make. Legendary, you seem to be nodding your head. What are your thoughts on that?
Yeah, of course. One thing is the high volume and the turnaround of the same amount of capital that you're slowly playing to zero, and the other thing is the fixed yield that accumulates over the year. But I still think, just from a PR perspective, there is a way to design this in a way that feels appealing to gamblers. I remember there used to be a European casino that had a roulette table that just did not have a zero. It was capped at the amount that you could play there, and it was we basically have a couple of games there where we don't take a house edge. Obviously, you can't go there and start to bet 10K on black and do that 1,000 times and wait for the one moment where you have a win streak and are up 5, 6, 7 wins in a row, which is bound to happen, and then quit. Because obviously they would be losing business for the casino, but they were able to offer that at a lower scale, and it was a very prominent casino just for that. But on the other hand, we're all gambling in crypto either way, and I don't think that casinos need that many extra incentives to attract more people, because Rollbit and others are doing just fine either way.
Yeah, really, really interesting point. I'm glad we brought that conversation to the fore, because I think it's going to, these interesting things are going to play out, as in the next few months, as Pac-Man and team kind of rethink about how these things are going to work, and how probably other L2s copy these natively yield-bearing assets on chain, so that any of the assets that you're holding is just doing it automatically. As Brett said, it's not innovative in and of itself, the idea of something that is yield-bearing, but the fact that it's just done by default now definitely has flicked a switch in people's heads, I think. So that is interesting to note. Let's get into the headlines for today. We've got 3 pretty important ones, to be honest. The first one is the SEC news, which I think people responded to, well, the market responded to pretty well. interestingly. I'm going to share it on screen for the people who are watching in. The people who are listening in will give it a read out. So we have the SEC issuing a Wells notice to DeFi protocol Uniswap. The US SEC issued a Wells notice to the decentralized exchange. They said that, well, it was responded to by the lawyer, I think, of the chief legal officer by Uniswap. He said, if the SEC had authority over our self-custodial, non-intermediated products, it could tell us how to register them. It can't, and so it doesn't. It has provided no clarity and no guidance, as several SEC commissioners have stated in multiple dissents. Just for a bit of context, if you don't know, a Wells notice is a formal notification issued by the SEC to inform a company that the regulator's staff intends to recommend enforcement action against them. So this notice gives the recipient an opportunity to provide a written explanation or argument as to why such action should not be taken. It seems to be the case that the SEC has been investigating Uniswap since 2021, and they seem to be very, very happy to fight. That's like the headline news from the article. The founder, Hayden, had this to say. He said, today Uniswap received the Wells notice. I'm not surprised, just annoyed, disappointed, and ready to fight. I'm confident that the products we offer are legal and that our work is on the right side of history. But it's been clear for a while that rather than work to creating clear, informed rules, the SEC has decided to focus on attacking long-time good actors like Uniswap and Coinbase, all while letting bad actors like FTX slip by. He then goes on to explain some of the history of how he created Uniswap. I don't know if we need to go into all of that, but he goes on to say, yes, I'm frustrated. The SEC seems to be more concerned with protecting opaque systems than protecting consumers, and that we'll have to fight a US government agency to protect our company and our industry. This fight will take years and may go all the way to the Supreme Court. The future of financial technology in our industry hangs in the balance. Legendary, this is a pretty serious thing. I mean, at the moment, it's a Wells notice. So obviously this is before the more serious actual charges and things get filed. The market seemed to not like it for Uniswap. I'm showing this chart on the screen for the people watching in. We were at just over $11 yesterday, tanked down about 17% in the last 24 hours, down to 9. Remember, this token, I believe, it experienced like a bit of a run up in February as there was started to be rumors that the fee switch was going to get turned on, something which people were waiting for a long time for Uniswap. Like, so those token holders might be able to see some return from holding the token. But obviously, this type of investigation from the SEC has caused the price to turn. More broadly, crypto, though, responded pretty well. I mean, I don't know to what extent this was all to do with the news, but Bitcoin, as we said, it was up above 70 again. ETH was up as well. Solana was up. So the price, the negative price action seems to be confined to Uniswap. How much weight? First, Legendary, what do you think about the news? Second, how much weight do you think the market is attaching to this type of attack from the SEC on various crypto companies now?
Yeah, I think the price action kind of shows the anticipation of fee switch going on, price rallying, and then now it looks like there's not going to be the fee switch, which is going to be turned on, and then the price going back, but not to the level where it was before the run up. It's still a bit higher than that. I think it's not as significant for the broader market as it might feel initially, because we are already living in this world where we can't have this fee switch and basically give fees back via a token that you earn as a protocol. But we already find ways to structure airdrops, to structure token launches, to set up foundations, to set up separate entities, because if you want to do this in a US-based jurisdiction, you have to be a bit more creative about it. And that's a world that we've already been living in, and tokens still have been thriving in that world, given those regulatory changes. So in my mind, it would work that way if Uniswap is to come out victorious, then that would be a massive positive sign for many, many tokens. But in absence of that, if they basically cannot turn on their fee switch and nothing else would change, we would essentially maintain the status quo, which we've already been dealing with.
Okay. Interesting. You're definitely right. People have come up with all kinds of creative ways to bypass this type of legislation that is continuously trying to dampen some of the innovation in this space. I agree with that. Sammy, as part of the article, they go on to say this, or just in kind of some of the more detail. They said, as part of Uniswap's defense, I'm going to share it for the people watching. As part of its defense, Uniswap Labs previously claimed that it is only the software developer responsible for building the front end portal to the app. The front end is separate from the Uniswap protocol itself, which is autonomous code released for public use. They say the Uniswap protocol, web app, and wallet don't meet the legal definitions of securities exchange or broker, and that they welcome protocol regulations for crypto, ultimately arguing that there's not enough clarity with what they are trying to in the space that they're trying to operate. Sammy, what are your thoughts here on that? What's the key takeaway for you?
Well, I think for me, it's the lack of clarity. Like you've got, I mean, it's complete deja vu from what Coinbase went through, and it was just the frustration where they're trying to literally get that regulatory clarity so they can be compliant, and then they're issued a Wells notice out of the blue. Well, not out of the blue because they've been investigated since 2021, but I can just see that the legal team's probably really frustrated. Like they want that clarity and they can't move forward without it. So actually, to me, it's probably a good thing that this has been issued because it will eventually come to a head, similar to the Coinbase case as well. So for me, it's just frustrating, I think.
Yeah. I mean, definitely in the end, these things will come to a head. Legal clarity is what people want. So yes, these things will keep getting delayed, but I think legal clarity is actually really important. One bigger question, maybe for Legendary, if you've been around longer than me in this space, is to what extent, it was like, well, the final question I asked, to what extent do you think the market just shakes off this stuff now? Like, I know the Uni token price is down, but when these types of things happen now and moving forward, do you think the fact that the broader context of crypto where like, look, Bitcoin is now in ETFs, BlackRock is now building on Ethereum, all these like huge players are clearly adopting crypto in bigger ways. Does it matter that the SEC is issuing a Wells notice to protocol? Because I believe, or my suspicion is, back in 2017 or 2019, it would have mattered much more. Do you think that's fair? What is your perspective as someone who was around back then?
Yeah, I think back then it would have mattered much more when you essentially had SushiSwap and Uniswap at the forefront of starting the airdrop season that we still love to enjoy today. And then you have the biggest protocol, and there's like only this protocol. There are not any real L2 solutions and Uniswap forks, et cetera, out there. That would be more impactful in a negative way in a much smaller landscape that we had back then. And obviously now with, as you said, a BTC ETF that is live, an ETH ETF that will come, maybe not in May, but at some point it will come. That's a completely different thing. Plus, I think we also have figured out many more ways to structure that. And to me, the positive sign about that, like I do share the sentiment of frustration that Sammy has expressed with that situation. But the positive thing about that is Uniswap's commitment to stay in the States and fight the fight and get that clarity, because they could very well say, look, we just don't want to fight that fight and we are fucking off to another jurisdiction where we don't have to deal with this bullshit, but being like committed to the American market to get that clarity in a similar way how Coinbase is doing that and how other players are doing that, to finally get the US to, well, have clarity and deal with that in a more positive way, is very, very helpful. Because at the end of the day, we will need a legal framework. Like, as much as I like to shit on the EU for many things that I don't like, at least one thing they did well is with the MiCA, the Markets in Crypto Assets Regulation Framework, to have a pretty good framework on how they want to approach this market. It's annoying in a couple of things, because a centralized exchange has to pay capital gains on your behalf, and they have to figure that out, which is obviously a heavy lift. But at least you know the conditions, you know the environment that you can operate in, and then you can make an educated decision. Do I, as a company, want to be in the EU, or am I like, nah, this is too much, I don't like this framework, I want to operate somewhere else? but at least you have the clarity, and that is worth a ton.
Yeah, I like the take. Interesting stuff. Glad we brought that to people's attention. Glad we got to reflect a little bit on the bigger market implications of that type of notice the SEC can serve now. Let's move on. We've got two more pieces to get to. We'll try to deal with these relatively quickly. The first piece is the piece to do with MarginFi. For people who don't know, MarginFi is or was, I'm not entirely sure at the moment, but was the biggest DeFi protocol on Solana. It had a huge amount of TVL prior. In the last 24 hours, it has lost, I don't know the precise number. When I wrote the snapshot in the morning, it was at 100 million in 24 hours, I believe. And this tweet here suggests from Ignis DeFi Research, lost 169 million in about a day. So I think that number has gone up. That tweet it's about an hour old. I wonder what the number is now. The reason why this has been happening is, let me try to summarize it as best I can. There was a tweet from two reasons. One, most immediately, Soulblaze wrote this tweet yesterday. Soulblaze are, how would you describe it? Like the equivalent of staking ETH. You can stake your Solana with them and you get your returns. And they they were not getting, their holders were not getting paid out via MarginFi. So they wrote this long tweet where they basically were complaining about MarginFi not fulfilling their obligations. MarginFi responded to say, look, this is a hit piece. This information is completely wrong. These are the reasons why we haven't paid out the emissions that we were supposed to. But then on top of this, like the broader complaint against MarginFi is that they have been farming their users. They haven't been particularly, kind to their participants, their users. And there seems to be a broader complaint against them as a team which have been quite abrasive and aggressive and kind of taken on this personality. I saw one prominent account describe them as having taken on some type of god complex. That's in the words of the account, not mine. And then as a consequence, I saw this tweet from DC Investor who shared in response to one of their team who was coming out and explaining like their position, said, I'm going to show my hand on something. At many points in the MarginFi's history, my Twitter persona has been very intentionally controversial. And goes on to say like, well, if you knew me properly, I'm not really like this. This is just a persona that I'm putting on. This is not my thing. And DC Investor says, very respected kind of thought leader, investor in the space. I'm going to take the other side of this. I hate projects with engagement, rage bait founders, and I will actually go out of my way to avoid them and their products, and will generally recommend that people stay away from them completely. Love your users or lose them. I guess the argument from the MarginFi team in their minds is that the more controversial you are, the more users you actually attract. And I guess DC Investors taking the other side of that. I think they kind of came to a conclusion where they said, oh, and then on top of this, the founder resigned in all of this kind of political fallout. So there's clearly internal problems, external problems. TVL is leaking at the same time. Solend, a different Solana protocol, said if you take your funds off MarginFi, we'll actually give you an airdrop. Because MarginFi aren't giving you an airdrop, they've been farming you. We'll give you an airdrop instead. So take your funds off there and deposit into us. I haven't checked that information yet. I'm sharing it on the screen for the people looking in. So I haven't done that yet. I did actually personally move my funds off MarginFi, but I haven't put it anywhere else yet. So a real like mess of a situation, Legendary. In fact, let's go to Sammy first on this one. Like a complete mess of the situation. I know you were following it closely as well. Maybe you were also withdrawing at the same time, considering where else to put your money. Like, what do you make of this kind of drama? Like when you see this kind of drama, what are you thinking? How are you responding? Especially when we've had situations where there's been drama before. And in this space, I saw a comment in the tweets like, when you see smoke, could there be fire as well? It's often quite reasonable to make that connection in this space. So how have you felt about it?
I mean, I completely agree with DC Investor. There's absolutely no way I'd leave a capital on a protocol where there's internal politics, there's rumors outside about things not being repatriated to the users properly. So I was like, nah, it's not even worth the risk. You can immediately take it off. If the dust settles and things calm down a little bit, then you can put it back on. But there's plenty of other protocols in the space that are going to reward you. And I think Solen then went on to say, there's another one there, they're saying choose tokens, not points, not forever points, because there's obviously a rumor that MarginFi are just doing these points forever. There's no sign of a token coming. And I think the frustration came from the founder where everyone's like, just drop a token. That's all he ever heard. So I think he just had enough. It's like, this is not what I want. But yeah, I don't know. I just think having that controversy on the timeline, like, it's just unprofessional. I just wouldn't put a lot of capital to a protocol that has that. It just doesn't make sense. Like, it's just too much risk. It's already a risky space. Like, why over leverage yourself, basically?
Yeah, look, I like that take. I think we'll keep it moving, Legendary. I'm sure you've got thoughts on this. We'll keep it moving. And to be clear, I hope they all sort it out. Like, I don't want anyone's funds to be like, whether you keep them on, whether you take them off. I think it's fairly thoughtful to be cautious with your own funds. That they're ultimately the decision rests with you. But I hope that they figure it out either way, because the kind of fighting on the timeline seems like high school. Frankly, and people need to sort it out when there's so many honest, hardworking people's funds are at stake. So that would be my hope for it. Let's hit the Web3 snapshot to get you up to speed with everything else that's happened in the space in the last 24 hours. And then final bit of an update on the Ordinals stuff and some more hot Ordinals staying hot, basically. Let me share the screen with the people watching in. And here is the Web3 Roundup from the snapshot, which is pinned up top. Number 1, Feisty DAO buys Keyboard Cat 1 of 1 for 36 ETH. Mentioned that already. That happened on Foundation. Number 2, Swell launches pre-launch deposits for its L2 for restaking. And Swell is actually trading on pre-market for 2.8 billion FTV. Remember, Swell is another restaking place, another place you can restake your ETH, and they're actually launching an L2 as well. Number 3, NFT lending platform Sharkify has included SMB Gen 2s and Mad Lads in their upcoming airdrop. Another win for those Solana NFTs. Make sure, but you have to register. That's the key detail there. You have to register, otherwise you will not get the airdrop. So got to stay awake, even if you are an expensive asset holder. Next, Mintify Base Keys live today at 6 p.m. UTC as part of its marketplace expansion to Base. Andrew Tate, in other news, tweets that he might sell off a Dubai apartment and just ape it all into BTC. That's pretty bullish, I hope. Number 2, Grant Yun announces first Solana drop on Thursday, 18th of April on Exchange Art. That's very cool to see a very, very prominent artist explore Solana as well. And finally, NFT Marketplace Creatorhood airdrop is worth up to 6 to 7K for select NFT holders. I might not have that 100% right. I think there's one condition: if you have certain NFTs, you have a certain allocation. If you have more than 50 ETH of volume, then you are in that bracket of 6 to 7K potentially at the current prices. But there's a bit of a process in order for you to work out the claim. So take a look at that if you think you might be eligible. That is the Web3 Roundup. You should be fully up to date with everything happening now. Legendary, the final headline for today is this Rune nodes drop to Node Monks. Trading at 0.034, Runes pups trading to 0.11 BTC, and Runestones hitting 0.09. I've seen a few people here. Look, we've been speaking about runes and ordinals in the last few days, and we've also said we're not like the hottest experts in this sphere. However, I've noticed people commenting like, look, I think we're running a bit hot at the moment. There's a lot of pre-halvening speculation, people getting like very, very excited. Although you might not be, the hottest on ordinals in general, where do you feel we are on that kind of greed meter at the moment when it comes to ordinals?
Yeah, I do think there's a bit, or actually a lot of pre-halving greed out there. Cook Capital did kind of ask the question, who will be the buyers after the halving, when you're now buying into the speculation that after the halving, this will be worth more and more and more. I do know too little about the ecosystems behind that. Just from my gut feeling, I would say greed is pretty damn high right now. I'm not saying we're not going higher, but it seems to be a very greedy environment right now.
Yeah, I don't know. Two things. I kind of feel that, but I'm not sure whether I'm just feeling that because I saw it a little bit on the timeline yesterday. So I don't know if I'm being influenced as well. Sammy, what do you think when it comes to the greed meter on ordinals in particular?
I still think there's too much friction for it to be overhyped. Like
Okay.
I still think that there's infrastructure that needs to be built for the masses to come in, and that's being built out. So I think we're still early. Like I'm not deep into ordinals at all. Like I was still asking. I mean, I got into it. I got my first ordinal back in January or February, early February last year. So I was one of the first to do it, and I wrote to Threadnet and did loads of research. But even from there, like it's changed so much that the platforms and wallets that I used back then are just changed. And I think 12 months from now, it's going to be a lot more evolution in that sense as well. So I think once that happens and once that transition for new people to come in becomes a lot more easy, I think that's when we'll see the super run up. But I think there'll be a bit of volatility around the halvening, but it doesn't really concern me. I think there's too much friction at the moment for it to be a top signal.
Interesting. I like the contrasting take. We have spoken about the friction on the Bitcoin side a little bit. Obviously, there's no way to easily dump liquidity in the same way that Blur just means you can just sell a bunch of stuff all in one go, and there's a bit of friction there too. Final question, maybe legendary, is what do you think about the ancient Bitcoin whales, who lots of people like to reference as the ultimate buyers of our bags when they wake up and realize that the thing that they must do with all of this ancient Bitcoin that they've been storing for years and years is to buy JPEGs? Do these people exist, and are they actually going to do what their destiny should be, which is to buy the JPEGs?
I mean, these people exist, but whenever this comes up as an example, obviously I love the narrative. I would love for someone with 1,000 BTC to come in here and be like, yo, I'm gonna sweep the rune stone floor with 50 BTC and pump my own bags. But it reminds me so much of the last bull cycle, where our hope back then was Coinbase launching an NFT marketplace. And we were so fucking ready for that exit liquidity. I was sitting there.
I remember I specifically bought NFTs. This is how naive I was.
Me too.
I bought NFTs thinking, I don't want this NFT. I'm gonna sell this to people who are
Me
buying
too.
it.
I had a little shopping list, what I want to sell to the masses. A couple pudgies, apes, everything ready for them. I prepared a beautiful package, and the marketplace was utter shit and nobody cared about it. So yeah, that made me a bit cautious about some sudden influx of cash by a target group that we have designated to be exit liquidity narrative.
Especially when there's no like obvious indication that they have any interest yet.
Did that get decommissioned, or is it still around? Because if it's still around, we could actually see that mass onboarding event 24 months after it was built.
Still got the hope. No, it got decommissioned, but who knows? More marketplaces. Yeah, I don't know. It's a funny reflection, but I do think there's a key learning in that, right? Like, although that might have happened a couple of years ago, there's a key learning in reflecting on our own naivety to think that was going to be some huge unlock, and it seemed so obvious to us at the time. And it's important to be honest about that to people listening in. Like, obviously, we're doing pretty well in the market now, but it doesn't mean that there haven't been like huge, colossal, like failures in thinking, and huge examples of like, I mean, looking back at that one, I'd go flat out stupidity based on.
And I had maximum conviction on that. I specifically looked for cheap NFTs that the retail customer might be able to afford, that could be popular. Like, I had maximum conviction. I thought this is the easiest play ever, and was a very good lesson. Absolutely agree on that.
Maybe we'll close on that. The key question that I think it would be interesting to ask yourself as we continue into the bull market is, like, say that was one particularly stupid thing that you thought was super true at the time and turned out to be wrong. What is the thing that you are absolutely convinced about right now, right here, right now, that has the potential to be the same thing? Because there will be something, right? If it was able to be the case, then there will be something that you have super high conviction on that will be flat out wrong, and just make sure that you're kind of risk adjusted for that not actually playing out, I guess. Final thoughts?
I don't think I have a conviction play that is as strong as my Coinbase thesis back then. Now I'm like, yeah, Ordinals, absolutely love the risk-taking narrative, love gaming tokens, got exposure to all of them, but I don't have this maximum conviction on one single event that I had back then.
Permanently scarred. So
Yeah.
funny. Look, really, really interesting discussion. I hope that was interesting to everyone as well. Not just the news, which we always run through every day, 7 a.m. Eastern time, 12 p.m. GMT, but also some of the personal reflections, personal thoughts, both in the discussion section of the show and towards the end, where we talk about some of our nonsensical trading decisions back in 2021. We do this every day. We hope to see you again tomorrow. We'll be closing the week off as usual. Have a wonderful day. Thank you to my co-host, Legendary, and Sammy, as always. Thank you to our speakers, who was just bred today. Fantastic contributions, as always. And thank you to you for joining us. We will be back with you again tomorrow. We hope to see you then. Take care. Bye-bye.